Title: Why isn't Bitcoin pumping after the halving? A deep dive into market dynamics. Bitcoin halving has historically been a precursor to significant bull runs, with the cryptocurrency typically experiencing substantial price increases in the months following these events. However, the latest halving has not followed this trend as expected, leaving investors and enthusiasts wondering why Bitcoin isn't pumping. This video explores the myriad factors influencing Bitcoin's post-halving price behavior, offering a nuanced view of the complex interplay of market dynamics, economic conditions, and investor sentiment. To understand why the Bitcoin isn't pumping, must watch this video till the end so you can understand how the financial market behaves. Let's begin. Bitcoin halving. To fully grasp the current situation, it is essential to understand what Bitcoin halving entails. Occurring approximately every 4 years, halving reduces the reward for mining new blocks by 50%, effectively diminishing the rate at which new Bitcoins are introduced into circulation. This event is designed to mimic the scarcity and deflationary characteristics of precious metals and is a fundamental aspect of Bitcoin's value proposition. Factors influencing the current halving cycle. 1. Long-term supply effects. From a broader perspective, the 2024 halving will further enforce Bitcoin's scarcity. As the rate of new Bitcoins entering circulation slows down, Bitcoin will inch closer to its ultimate cap of 21 million coins. This built-in scarcity is fundamental to Bitcoin's value proposition as a digital store of value, often termed digital gold. This aspect could attract more institutional investors looking for a hedge against inflation, particularly in an economic environment characterized by large-scale fiscal stimuli and concerns about currency devaluation. 2. Macroeconomic conditions. The macroeconomic conditions surrounding each Bitcoin halving can significantly impact its market response. Unlike previous halvings, the most recent event unfolded against a backdrop of global economic uncertainty, influenced by factors such as the pandemic, geopolitical tensions, and widespread inflation concerns. These elements contribute to increased market volatility and a cautious investment climate. Traditional and crypto investors alike have become more risk-averse, which tempers the bullish enthusiasm typically seen after a halving. Moreover, as Bitcoin continues to integrate with the broader financial markets, it becomes more responsive to these macroeconomic shifts. For instance, when traditional markets experience a downturn due to economic instability, Bitcoin's price often correlates, reflecting investor sentiment and broader market trends. This connection suggests that while Bitcoin is decentralized, it is not immune to the waves caused by larger economic forces, which can dampen the expected positive impact of halving events on its price. 3. Institutional involvement. Institutional involvement has significantly reshaped the Bitcoin landscape, particularly influencing its market dynamics post-halving. As major financial institutions, hedge funds, and corporate entities have begun to embrace Bitcoin, their substantial financial power and strategic market moves have brought both stability and new challenges to the cryptocurrency space. This influx of institutional money has helped legitimize Bitcoin as an investment asset, attracting more conservative investors and integrating Bitcoin more closely with traditional financial markets. However, these institutions often employ more calculated and less speculative investment strategies compared to retail investors. They are also likely to engage in hedging and diversification, which can temper the sharp, bullish spikes previously observed after halving events. The presence of these large players also means that Bitcoin's price is increasingly influenced by broader economic indicators and stock market trends, potentially diluting the immediate impact of supply shocks caused by halving. Thus, while institutional involvement brings benefits like reduced volatility and increased liquidity, it also introduces a level of market sophistication that can moderate the dramatic price increases historically associated with halving events. 4. Market maturity and saturation. As Bitcoin matures, the cryptocurrency market is experiencing increased saturation and competition, which significantly influences the dynamics observed post-halving. The market's maturity is evidenced by the proliferation of cryptocurrencies, blockchain projects, and derivative financial products, each vying for investor attention and capital. In Bitcoin's earlier days, the limited availability of alternative cryptocurrencies meant that Bitcoin dominated market interest, particularly around significant events like halvings. However, with today's expansive array of investment opportunities in the crypto space, from altcoins to tokenized assets and decentralized finance platforms, investors now have a multitude of options. This diversification of investment opportunities dilutes the capital and speculative attention that might have previously concentrated on Bitcoin alone. Additionally, as the market matures, investors become more discerning, often seeking projects with strong fundamentals or specific use cases, rather than speculating broadly on Bitcoin as a catch-all asset. This shift contributes to a more stable but less explosively reactive market environment post-halving, as the novelty of the halving event itself is less a driver of massive price surges than in the past. 5. Advanced market tools and derivatives. The evolution of advanced market tools and derivatives within the cryptocurrency space, particularly for Bitcoin, has introduced new dynamics to the market that affect how price movements unfold post-halving. Derivatives such as futures, options, and leveraged tokens allow sophisticated investors to hedge their positions, speculate on price movements, and manage risk more effectively. This ability to hedge can dampen the pronounced volatility typically associated with halving events. For instance, if investors anticipate that the price of Bitcoin will rise due to a halving, they can take positions in futures contracts to lock in prices or use options to bet on the price movement without holding the actual asset. Such tools not only cater to a broader range of investment strategies, but also bring a higher level of liquidity and price stability to the market. As a result, the sharp spikes and drastic falls in Bitcoin's price post-halving have become more tempered, reflecting a market that reacts less dramatically to changes in supply dynamics. 6. Regulatory landscape. The regulatory landscape significantly impacts Bitcoin's market dynamics, particularly in the aftermath of a halving event. As governments and financial authorities around the world become more attuned to the rapid growth of cryptocurrencies, their regulatory stances can either bolster or hinder Bitcoin's market performance. Regulations targeting money laundering, securities compliance, and consumer protection have been particularly influential. Moreover, announcements or rumors of regulatory changes tend to spark volatility, as market participants react swiftly to news that could affect their holdings' legality or profitability. Therefore, the regulatory landscape remains a critical external factor influencing Bitcoin's price trajectory and market stability after each halving cycle. 7. Psychological factors and speculative trading. Psychological factors and speculative trading play crucial roles in shaping Bitcoin's market dynamics, especially following a halving event. This behavior involves investors buying up Bitcoin in anticipation of the halving, with the expectation that prices will skyrocket afterward, as they have in past cycles. However, once the halving occurs, the actual market impact may not live up to exaggerated expectations, prompting a swift sell-off that dampens any initial gains. Additionally, the fear of missing out can cause less experienced traders to enter the market at peak valuations, which can inflate short-term bubbles that are unsustainable. When these bubbles burst, they lead to sharp corrections, contributing to Bitcoin's volatility. Moreover, the psychological impact of seeing rewards halved for miners can create uncertainty about the future profitability of mining operations, influencing the overall market sentiment. These psychological factors, combined with high levels of speculation, mean that Bitcoin's post-halving market behavior is not only a reflection of changes in supply and demand, but also a complex interplay of collective emotions and trader psychology. Post-halving analysis. The reasons behind Bitcoin's lackluster performance post-halving are multifaceted and reflective of its evolution and integration into broader financial systems. While the halving remains a significant event with long-term implications for Bitcoin's scarcity and value, its immediate impact on price is moderated by a variety of economic, regulatory, and market factors. Investors should consider these dynamics and adjust their strategies accordingly, focusing on the long-term potential of Bitcoin rather than expecting predictable short-term gains. That's all information we have today. What are your thoughts on Bitcoin's performance post-halving? Are there other factors you believe are influencing its price? Share your insights and join the discussion below. If you found this analysis helpful, please like and subscribe for more in-depth cryptocurrency and financial analysis.